following AfriBank's results announcement on Monday yesterday, Oceanic Bank's numbers seeming to provide some wind under the wings as well. It's clear. Is it as clear-cut as looking at the headline number that it swung to a 2.56 billion naira pre-tax profit in the first quarter? Or do we have to interpret this even further? Because certainly, the entire banking crisis has made investors wary about interpretation.
Yes, I think we have to look at the headline figures are good, considering the losses they announced for 2009. But I think we have to delve deeper into the figures, as you suggested, to look at what's the reason why they've bounced back. Is it because for Oceanic Bank, for example, their operating expenses have dropped by 13%, which is a good sign. But is the profit due to better efficiency? Probably, but is it all that, or is it some write-backs from some of the provisions that were done in 2009 and they're writing back now? So you have to look deeper into the figures to find out, because even if you look at just the loans and advances, they only increased by about 3% from the same period 2009. So what's actually driving this return to profitability?
Yeah. Begging the question then, whether this recovery that we are seeing is a manageable one, a sustainable one moving forward on the basis of fundamentals of this company. I mean, what's your outlook moving forward?
I think moving forward, they've been stabilized. I don't think any analyst can argue that they've been stabilized. If you look at the 2009 figures and what they've announced for quarter one, just the headline numbers in terms of earnings, operating expenses, they've been stabilized and efficiencies there. It's now, what is the model going forward? Because the old model of plowing money into oil and gas sector and the capital markets has shown that it's not going to work. So they have to have a more sustainable model going forward, and what's that going to be? I mean, the management of these rescued banks at the moment are interim managements, according to CBN. Now, are they going to be able to do a medium-term plan going forward, or are we waiting for them to be recapitalized as CBN is planning for them to then have a plan going forward?
Of course, a lot of the sector's healing as a whole has become dependent on the passing of the AMC bill. Yesterday, we had Nigeria's parliament resume after recess, and it was being expected to consider legislation to create that asset management company. Has anything new emerged on that front?
No. The session in the House of Reps yesterday was a bit controversial, and it wasn't, to the best of our knowledge, it was not discussed. But the AMC bill is important. I think CBN is applying pressure to make sure that everything is done to get there as quickly as possible. But when you look at the history of the AMC bill, I mean, initially the CBN governor was hoping that it would be ready by December 2009. We're now near the end of June 2010, and we don't have an AMC in place.
Exactly, but the whole focus of this is to create a bad bank as such, which could soak up estimated 1.5 trillion naira in non-performing loans and help get Nigeria's banking sector lending again. In the meantime, we've been reading headlines this morning that Diamond Bank seems to be making some steady progress on its own. It's extended a further 5 billion naira to the micro, small and medium enterprises in the country. What have you made of that move and that strategy to get its foot in the door in terms of entering that sector specifically, Kayode?
If you're going to see sustained non-oil economic growth in Nigeria, it's going to be the SME sector that drives it. So anything that leads to easier access to funding for that sector is always a good thing. Now, the problem we have in lending to things like the SME sector, and why a lot of banks are shied away from it, is because we don't really have a credit system in Nigeria. There's no no effective credit bureaus. I know CBN have licensed one or two, and are trying to bring them on stream, but we don't have an effective credit history system. And so it's very difficult to lend to the SME sector. And that's why the access has been difficult. I think if we improve the infrastructure around that and make it easier to lend to the sector, and then the sector has more easier access to funding, we're going to see some serious growth in that sector.